Gold and silver are rebounding after yesterday's losses, but equities are still seeing a mixed bag. The Nasdaq is down 1%, while the S&P 500 and the Dow Jones are up. Lobo Tiggre of the Independent Speculator joins us today to talk about what is wrong with our economy today. And by the way, Lobo, before we continue, you called what happened yesterday, right? You and I spoke about a couple weeks ago, a month ago, and you said when we get a vaccine announcement, we're going to get a knee-jerk reaction in the gold market, and that's exactly what happened yesterday. And this is a question I've been getting from a lot of viewers coming into my inbox, is what's going to happen to gold should a vaccine be introduced?
You can see knee-jerk reactions to things like this. As you and I are speaking, we have this knee-jerk reaction to this really, I think, insignificant change in CPI data. That is true, but I want to jump in right away and say I'm not a prophet. I didn't say this is the only possible outcome. You know me. I'm not the guy to make these bold predictions that may or not be true. Without naming any names, we know there have been some guests on your show who made bold predictions for what was going to happen before the election. But it's important, right? You look forward, you look at probabilities, and yes, I think it was pretty predictable that there I said it, predictable. If there was big news and a 90% effectiveness rate, that's big news. That's more than any of the experts were expecting. So yeah, that's big news. There was a knee-jerk reaction, way overdone, lots to talk about in there, and I think a source of opportunity.
Why was it overdone? I mean, you don't think it's a fair move? We talked about this before, but in your opinion, the long-term fundamentals for gold haven't changed. So isn't that just the market correcting its course and just going from there? Wouldn't you say? But
let's actually come back to gold and silver. Let's look at the markets. Like the overall market reaction was ridiculous. Now, if Wall Street had been down at the bottom, right? If it had crashed in March and never recovered and everything was in the doghouse, and then there was good news, like better than expected news on the COVID front, then actually it would make sense for things to take off and go vertical on this great news. But that's not where we are. We're still, close to all-time highs. We reached all-time highs yesterday in some indices, at least intraday. And I mean, just look at movie stocks rising 50% in one day. That's ridiculous. Those companies are not worth 50% more than they were the day before. Or some of the stay-at-home trades, I don't remember the names, but I was listening to the tickers yesterday. Some of the stay-at-home trades dropping 20% or more in a day. It's not like suddenly everybody's going to stop using Zoom, or that something like Zoom or some of the work-at-home technologies weren't already on the rise before COVID-19. So I think yesterday's reaction, you look at the big picture, all that happened, it's clearly an overreaction. Now, I'm not saying that the vaccine isn't good. I'm saying, just look at what happened. It's totally out of proportion.
Here's a question that I got from a viewer. If gold reacted the way it did yesterday on just an announcement, what's it going to do when the vaccine actually comes out?
Well, so this is actually the subject that you asked me about last week, and why we got into this, not prediction, but looking at this possibility. And I think it's really important to bear in mind that nothing has changed. And the reason why gold was rising, that started with the Powell pivot. It started long before COVID-19 was a dark shadow on anybody's doorstep. Gold was already having a good year before the COVID-19 thing happened. So all that we can say about this is that maybe COVID-19 was a tailwind, and maybe that tailwind goes away. And that's why I don't see yesterday as any kind of sign of change. It was a knee-jerk reaction. COVID's going away, so that's bad for gold. Well, that's what's true in the heads of people who thought that gold was only up because of COVID, but that's not the case.
You talked about the possibility of a crash in gold and other markets. Would you call yesterday's move a crash? Would you use that word?
No.
I mean, 4% in a single day.
Not even technically a correction, right? We don't reach 10%. That's not even technically a market correction for gold. It was a big move. And it was, I think, an opportunity for people to understand that what's going on with monetary metals, gold and silver, is fundamentally driven by monetary and fiscal policy, not the COVID situation.
Okay, so if the vaccine isn't enough to cause a crash, what is, Lobo? What would be a trigger for a gold market crash?
Well, let's say it's not just this vaccine. Let's say there's a bunch more good news. You're asking me for a bear case here. Okay, so here's a potential bear case. I don't believe this will happen, but I'm answering your question. say there's more progress on not just the vaccine, but treatments. And let's say that the second wave happens, the shutdowns are effective or maybe not even necessary. Treatment is effective. And the whole thing just kind of blows away. And before the new Congress, whether or not the Senate in the U.S. is Democratic or not, before the new Congress gets in, before the new administration gets hold, but if there is one, before all that easy money can happen, it's canceled. Right? If fiscal and monetary policy suddenly turns or hawkish, now this is really a stretch, but you asked me, so I'm telling you. So, if the Fed starts talking about raising rates and Congress starts saying, oh, everybody's fine, everything's fine, we don't need any more money, that would be bearish. And I think I would still make a fundamental case, but I think that would make 2021 a really tough year for monetary metals. I think the odds of that are pretty slim, though.
Yeah, you're giving the best case for the economy, and as a result, the worst case for stimulus. Well, that makes sense. Okay, well, let's take a look at your tweet that you issued. That you made last week. I'm just going to read it. I know this will be contested, but if Biden is sworn in, he'll shut the economy down this winter more than Trump would have. So right off the bat, I know that you think this best case for the economy is unlikely to happen. But let's talk about your tweet here. Why do you think Biden is going to shut the economy down more than Trump would have?
I mean, just look, it's a political thing. If only to be not Trump. If he's sworn in as president, he's going to wear a mask and he's going to do everything that Trump wouldn't do or push in that direction. I think that's sufficient psychological cause here. But actually, never mind what I say or what I think. Look at what he said. His speech, as you and I speak, it was yesterday, Monday. He gave a speech about what he was going to do about COVID-19. And he talked about national shutdowns, national mask mandates. And I've got a lot of pushback for that tweet you mentioned. People say, oh, he's a president. He can't just shut down the economy. Well, no, I mean, executive power has its limits, though we have seen those stretched, I think, beyond the Constitution recently. But he can do a lot. And certainly leadership counts. The governors that support him, the local governments that support him would follow that lead. And he can do things on the national level. He could order federal employees to do things that would make non-compliance with his national mandates or national plan very difficult for local communities, even strongly Republican ones.
Why would he need to do this? We just got a vaccine announcement.
Because it's a vaccine announcement. It's a vaccine that needs to be kept at minus 80 degrees. It needs 2 doses, isn't going to be ready in mass numbers until next summer, and winter is coming.
All right. So you don't think Trump would have done this?
He might have been pushed into it, or the states might have done it even without him. That's why I didn't say it was a choice between shutdown or no shutdown. It was a choice between some shutdown and more shutdown.
All right. So basically what you're saying is the U.S. economy will be shut down again. Well, is likely to be shut down again. We're seeing that in Europe right now. That's happening right now in France and Germany.
Exactly right.
But
and that's what happened last time, too. It started first in Europe, and then it came to the U.S. There might be political will in the U.S. to be more resistant to it. But as the case counts rise and as hospitals start getting overfull, and never mind if the case counts aren't real. Like if you're one of those people that thinks everything's being called COVID-19, even if it isn't, if the numbers are there and the hospitals are full and governors and mayors are declaring emergencies, you're going to see a response. In a litigious society such as we have today, in a politically correct world such as we have today, the probability of the United States just ignoring, this huge upswell of panic, it's basically zero.
Lobo, I'm just going to point out that I don't think the stock markets are agreeing with you this week. Look what happened to the indices. Last week, continuous rise,
We're talking the economy right now. So actually, I think the markets are agreeing with me. The markets are saying vaccine, no vaccine, there's more easy money on the way. And woohoo, it's party time.
One thing that surprised me was that the markets rallied the way they did, given that Biden was leading in the election. Now, most analysts I've spoken to have said that a Democratic president would impose some sort of restrictions on investments. He wants to raise capital gains taxes. He wants to raise corporate taxes and whatnot. And yet markets continue to rally. How does that make sense?
It makes sense because, and if you look carefully at the patterns, right, the markets seem to be happier when Biden was in the lead, but everybody expected the Republicans to hold on to the Senate. A split government meant that the Senate was going to veto whatever crazy high tax ideas they might try to put through. So you would get more stimulus, which is good for the market, but you'd get government gridlock on any major negative changes. So that was a great combo. More easy money, less taxes going through. And then when that changed, when it hung up at 48 and people started saying, holy cow, it could be, that Democratic sweep could actually happen. That's when markets started getting more jittery.
So you don't think that we're going to get a tax increase before January, let's say?
No, I don't. No, there's no chance of that. Trump is still president, and until January, the Republicans still control the Senate until January at least. They may hold on to it, but no, nothing's going to happen before January.
Yeah, you also said in the tweet that it's a contested election. So how long is it going to stay contested, you think?
I think there's actually a statutory limit to that. I'm not an expert on this issue. I don't think that the legal challenges are going to do much good for the Trump team. A couple of them have already been thrown out. I think the recounts have a better chance of possibly doing some good. But again, there's a time limit. I think that has to be decided sometime by December, and I think likely it will be.
Okay, well, the last part of your sentence, they'll blame COVID-19, but for once, socialism might also get some of the blame for the trouble. What do you mean by that, Lobo? I mean, shutting down the economy, again, I'm just playing devil's advocate to your tweet here. Shutting down the economy is supposed to be a health issue. It's not supposed to be.
Well, we're referring
it's not
to
supposed
my
to be
tweet.
A political or yeah.
Yeah, no, I get it. So, it seems like you get somebody like Ronald Reagan, and he talked about reducing the size of government and cutting taxes and yay, capitalism, free markets. And there was a lot of economic trouble after Reagan's tenure, and that was blamed on Reagan. It was blamed on what he talked about. But the fact is that Congress increased taxes, Congress increased spending in the Reagan years more than ever before. I don't have the numbers off the top of my head, but it was something like 4 times more on the national debt after Reagan than before Reagan. But capitalism got blamed for a lot of government spending, or what I would call socialist-leaning government movements. And so Trump, he talked a lot about capitalism, and he did reduce some taxes and cut some regulations. I'm not saying it was all talk, but he certainly didn't put the economy on a hardcore free market basis. And so a catastrophe blamed on Trump could be blamed on capitalism. Whereas if the second wave proves more difficult than people are expecting now, and we have a lot of more shutdowns, economic firings, job losses, if the wheels fall off under the Democrats' watch, then maybe some of that blame will go towards the more socialist-leaning policies of that administration. A little bit of karmic justice there if it happened.
Okay, we're going to do a little speed round. I love playing this game with our guests. And so I'm going to give you a bunch of scenarios, and just all you have to do, I know you don't like giving predictions, yes or no, so you can say highly likely or highly unlikely. How's that? All right, we're going to start with the first one, which you just talked about. Contested election, Biden getting into the White House by January.
I think that's likely.
Okay. Another shutdown.
Don't shoot the messenger. I'm not saying I want that to happen. I'm saying I think it's likely.
I understand.
All right, go ahead.
Another shutdown for the economy, for all states.
All states, I doubt that. But major national shutdown, likely.
New York, Chicago, Seattle, Los Angeles, those kinds of places.
Shut down.
Okay. Goal to rally another 20% before the end of the year.
Possible. It depends on the outcomes.
Okay. Goal to crash 10% by the end of the year.
I think unlikely.
Unlikely. S&P 500 to crash before the end of the year.
That's possible. I'm going to lean towards unlikely. I think it would take a bigger scare coming in. People are hopeful now.
You don't think a shutdown of major cities is enough to crash the markets, Lobo?
I think that'll start happening maybe towards the end of the year. I don't think it's going to happen tomorrow. So as winter comes, winter is coming, right? But that's not necessarily by the end of the year. If we were talking 6 months, I might give you different answers on some of these. But we're talking 1.5.
Okay, all right. Yeah, let's just stick to the end of the year because anything's possible in 6 months to 1 year. Fiscal stimulus bill passed before the end of the year.
Unlikely.
Unlikely because of the divided Congress right now?
Yeah, I just don't think there's much mood to be cooperative right now. Certainly not while the election's contested.
All right. Trade wars. Will they continue?
Likely.
Likely. I am going to mention that Biden has basically announced right? He has announced publicly that his primary objective during his presidency is for us to return to normal, right? A return to normalcy is what his first item of the agenda is. And yet you're saying that the first thing he's going to do is shut us down.
I hear you, but he said end of the year. You said end of the year. He's coming in January, so doesn't matter what he says. I don't think the Chinese are going to suddenly be more cooperative now with Trump because Biden might be coming in.
All right. So even though Biden basically wants to reopen the economy again, first he's going to shut us down, and then reopen it once the vaccine's going to come out. Is your prediction?
No prediction, but that's not quite what we're saying. We're talking about the trade war. Shutting down the economy and ending the trade war are.
No, I'm going. I'm going back to the economy for a second here.
Yeah, Biden. He says he wants to reopen the economy. He said that in his speech, but to do that, we have to do the right things for COVID. Everybody has to wear masks, social distance, shutdowns. We have to beat COVID first, and that is the path to reopening the economy, according to him. So. Not now, not January, maybe next summer.
All right, finally, let's talk about uranium. I know you like uranium. Do you have any updates on your views?
Well, one, uranium is still having a great year. People hate it when things aren't going up. They're only happy when they're going up, up, up. But if they remain relatively high, that's not good enough. So first fact is just uranium is having a good year. Second fact is the fact that the price has not gone back down despite all the energy wobbles. Like even in March when oil went negative, right? Uranium didn't panic, didn't really change that much. It actually had a good quarter. And the reason, or a prime reason for this is, remember that uranium is used for nuclear power plants, which are great for base load power. This is not like wind that you use sometimes or reserves that come on. This is base load power. When you need your lights to stay on in hospitals and city cores and so on, that's where nuclear power does best. And that, I think, doesn't make it immune to all economic shocks, but makes it more resistant to economic shocks. You just don't switch off a nuclear power plant overnight because people are. So I'm very bullish, and I think the fact that prices have held up means that the secondary supply that beat prices up so much is no longer swamping the market. You add to that COVID shutdowns and so on. I think uranium will have a great 2021.
I don't think uranium moved much this week. Even though crude oil did. Do you think there's a correlation there? I know crude oil moved up on expectations that there's going to be stronger demand because of a vaccine. What about uranium?
Well, that's part of what I'm saying. The fact that uranium didn't move that much with crude oil tells you exactly what I'm saying, right? If my thesis is that there's winter's coming and there's more problems for the economy, that's bad for oil. Uranium is less driven by that. It really comes down to these long-term contracts in that space. This isn't a big, spot market like oil. I mean, you have long-term contracts that are almost all rolled off, and the buyers, they might say, "Oh, great, we can buy, below long-term prices on the market." But at some point, they need secure supply. They can't rely on spot markets forever. The big utilities are going to need long-term contracts, and the miners are just not going to sign them anywhere near current prices. So I'm very bullish, and I think uranium is not immune, but more resistant to all this economic turmoil that you and I are talking about than oil or other energy commodity resources.
Oh, one last point before we end the conversation here. Biden also wants to re-enter into the Paris Accord. How does that affect energy prices?
Well, I think that's a shadow over the oil patch going forward. But again, these things take years, right? So Biden re-enters the Paris Accord. We move towards these goals and things again. No, that's not good for coal or oil. But it's a years-long phenomenon. It is actually, I think, good for uranium. And it's interesting that the Biden campaign has come out as pro-advanced nuclear. I think most, not just insanely extreme people in this space, understand that there's a role for nuclear if you're serious about reducing carbon emissions.
All right, Lobo. Great talking to you as always. Thanks for coming on the show today.
Thank you, David.
And thank you for watching Kitco News. I'm David Lin. Stay tuned for more.